All right, everyone. It's been months in the making, but the Grizzle Conference Series is back, and we're pumped to bring you Uranium Con. As you know, we're your hosts. I'm Scott. This is Tom. Whether you're an expert in uranium or what we like to call yellow cake curious, you're going to learn a ton today, so buckle up.
We got a super special schedule. Great guests. We're going to bring the heat, guys. If you're new to Grizzle, thank you for joining us. We're blessed to have a wonderful set of guests that are going to bring great insights to the nuclear and uranium and energy markets. Buckle in, 2 hours plus. We're gonna just, it's gonna be a train of knowledge, information. One thing I can ask, if you are on YouTube, please hit that like. It helps a ton. And subscribe to the channel. We're always bringing great conferences, great insights, great guests. That would be wonderful. And if you are on Twitter, that's where our fam is. Please give it that retweet. You know what to do. Thank you.
All right, so coming up next, we got the green chicken himself, Doomberg. Get ready.
What a wonderful, we're always thankful to have a beautiful green chicken, the most insightful green chicken that I know. We thought you were going to be in a nuclear facility today, but with the yellow, with the white lab coat, but it couldn't happen, huh?
Yeah, Tom, Scott, great to be here, coming to you live from the chicken coop itself. And, this is where we produce the magic. And so this is where we do all of our recordings. And I must say, we were talking before we came on the air, you two are the most high energy, fun podcast hosts we get to interact with. And so when you reached out and asked us to come back for Uranium Con, we were, of course. And so here we are, happy to help you guys with this important conference.
The last time was so much fun. And obviously since then, that was Resource Con. You put out a ton of phenomenal material. Like, it's just been incredible what you've dropped on the energy space, guys. If you don't know, you should know. Doomberg is the fastest growing Substack in finance. Rocket Ship on Twitter, Rocket Ship on Substack.
For good reason, right? It's not for no reason.
No, exactly. So, Doomberg, set the table for everybody. The energy crisis that we're in today. Give us a landscape of how we got here. The dynamics of where we sit right now.
Yeah, you bet. So as we've written about extensively, and I believe we even talked about last time, the genesis of the energy crisis was born last year in Europe. The natural gas crisis, which was already becoming self-evident last fall, long before the war in Ukraine broke out, that has continued to manifest and has spread really around the world because the price of energy is set at the margins, and the crisis of Europe spread to Asia and has impacted energy markets here in the U.S. as well. Just this morning, we see out of Europe that natural gas is crashing through all-time record highs. Last I checked, it was $72 per million BTU, which is just an incredible, unthinkable price for natural gas. By comparison, 18 months ago in the United States, it was selling for $2 per million BTU. And this huge explosion in natural gas prices is having substantial ripple effects across all supply chains. And natural gas is unique because it is used not just to make electricity, but it's also burned to produce heat for residential and industrial use. And critically, it's also a raw material input into many downstream and important chemicals like fertilizers, for example. And so obviously, all of this was exacerbated by the direct consequences of the Russian invasion of Ukraine and the indirect risk premium that such uncertainty injects into markets. And so here we are today with the energy crisis in Europe in full throttle. The price of oil has come off the highs a little bit because of the U.S. draining of its strategic petroleum reserves. And if we weren't doing that, we'd see a completely different price of oil. But just to benchmark people, $72 per million BTU natural gas in Europe is the equivalent on an energy basis of $400 a barrel of oil or more. And it's really just an amazing thing to watch. The price of electricity in Germany, which will be, of course, discussed extensively at Uranium Con because of their nuclear policy, The price of electricity, year ahead electricity, this morning crossed 500 euros per megawatt hour, and 18 months ago it was 40 euros per megawatt hour. And you can't have a 12-fold increase in your electricity prices and expect to run a value-added advanced manufacturing economy like Germany has become. And so the table is set for a nuclear renaissance. We're starting to see momentum building in the nuclear space, and that's why I think Grizzly's Uranium Con it couldn't be better timed, and again, it was really a no-brainer to participate in it. So I appreciate the invite.
Yeah, Doomberg, thank you. It does a great overview. Just on the side of looking at where we are right now, right? It almost feels like you don't really get into these situations of incredible energy scarcity without actually doing something stupid along the way and repetitively doing something stupid. Just wondering how did Europe get into this malaise of just thinking that not having reliable baseload, diversified baseload. It's just would love your thoughts on just how that happened and how quickly can we pivot out of here, or are we looking at a period of a tough couple of years or more, right? As you said, 10x price increase. That's not conducive to anything.
Well, here's the thing that people that don't have direct commodity experience in industry sometimes fail to understand. It's actually not that significant of a supply shortage. The price elasticity of demand for something as fundamental as energy and electricity and natural gas and oil, the price elasticity of demand for such commodities is staggeringly inelastic, right? And so I'll give you two small examples. The global demand for oil is roughly 100 million barrels a day. The Strategic Petroleum Reserve release amounts to 1% of that. That 1% is probably responsible for shaving off $30 to $40 a barrel on the price of oil today. Price of oil is back around 90. If we were not releasing that 1 million barrels a day out of the Strategic Petroleum Reserve, the price of oil would be substantially higher than it is today. That shows you that it doesn't take much of a deficit to cause a price crisis. And to give you another example. Yes.
Yeah, I think you're going to talk about the example about Freeport, because that was the example that I heard you tell that it was 100%. Brilliant.
Yeah. So the U.S. Again, just to use round numbers, the U.S. produces 100 BCF of natural gas a day, of which let's say 12 gets exported through liquefied natural gas export terminals. Freeport LNG exploded a few months ago, and that took 2 BCF offline that was headed towards Europe. So an explosion that impeded 2% of U.S. production, or somewhere around 20% of its exports, caused the price of natural gas in Europe to basically double. And that shows you just what a nice edge the price of commodities are. And of course, it makes sense intuitively. The price of oil collapsed to minus $37 a barrel on a supply glut, and then skyrocketed back to 135 or 137, 2 years later on a supply shortage. And if you actually look at the volume of production, these swings aren't actually all that high. And so to your question, this is nothing more than a massive sort of experiment in the inelasticity of demand for energy. And as we say, energy is life. And what is the clearing price of life, and who can afford to pay it? So right now, you're seeing the price of coal skyrocket because Germany and Western Europeans are buying every single pound of coal they can get their hands on, which is going to price out the South Africas of the world and the Pakistans of the world. They can't compete for the incremental LNG ship. And so you're seeing rolling blackouts in the developing world, all because Europe screwed up its energy crisis and, of course, made worse by Vladimir Putin's invasion of Ukraine. And so, as quickly as we got into this mess, the good news, the flip side of inelasticity of demand, is that if we just got sane, we could very quickly abate this crisis. Apparently, we've not yet suffered enough pain, or by extension, caused enough pain by the exportation of the inflation that we're sending to the developing world for us to yet get fully serious. Although the signs are there. We are seeing some early indications that a return to sanity and a return to physics may in fact be on the way. And for that, we are both grateful and hopeful.
So I had two questions here. It sounds like it's kind of a dire situation going into winter for Europe. Are there escape valves that they have, or are they kind of just going to have to cut back on their energy usage and burn more wood? Maybe you talk
well,
about
they could. Sure. The first thing they could do is postpone the closure of the 3 remaining nuclear power plants. That would be a good start. The second thing they could do is declare that they're going to make a national project out of restarting the 3 that they closed at the end of 2021. Until we see those milestones, Germany and by extension Western Europe have not yet suffered enough pain. And ultimately, it comes down to the resolution of the crisis in Ukraine. And so if peace broke out tomorrow, the price of natural gas in Europe would collapse. The price of natural gas in the US would collapse. The price of oil would collapse. And Doomberg would be happy because energy is life. And we're not predominantly investors in the energy space. We are analysts. And we're pro-human at that. And so the big question is, will either peace break out, which doesn't look like an optimistic scenario where we sit today. Alternatively, what we fear is a rightward tilt in European politics, either at the ballot box or through revolutions. And a fracturing of the NATO alliance could see certain countries cut a deal with Russia, because ultimately energy is the real currency and the euro is just a construct. And so we shall see. I think there's if we begin to see the last holdouts of sort of the nuclear sanity policy, i.e. the Germans and the Green Party in Germany, perhaps reconsider their foolhardy policies, that would be a sign. The alternative to that is either a very cold winter and popular revolt, or cutting a side deal with Putin and opening up Nord Stream 2 to let natural gas flow through the pipeline, which is Putin's geopolitical gambit, and would be a substantial failure of Western policy if that were to occur.
Doomberg, a question just on how Russia, obviously, Russia was never in the last 10 years, it's not like we knew this was, best buddy type situation. How did Germany allow themselves to get into this scenario where, in the probability scheme of things, a war with Russia was not, some sort of very low probability event? How did they get so beholden to Russia for power like this?
Well, contrary to how it's
gas
reported and portrayed in the Western press, there's a very strong pro-Russian seam in German politics. The former chancellor of Germany, Gerhard Schroeder, sat on the board of Gazprom. And BASF, as we wrote in one of our pieces, More Dun Verbund, has basically bet its existence on the continued flow of cheap natural gas from Russia. And for the better part of a decade, that looked like a very good bet. Unfortunately, for those pro-Russian elements of German society, Putin had other plans geopolitically, and recognizing the leverage that the energy policy mistakes that the Western Europeans implemented, recognizing the leverage that handed Putin, and as Peter Zeihan would argue, staring down the barrel of a demographic time bomb, he had to move on what he considered to be serious national security threats, and convinced himself that he had enough leverage over Europe, and that Europe wouldn't be so silly as to oppose him, given that he holds their entire energy future in the palm of his hands, thanks to their own behaviors. That he ultimately felt emboldened to make the move that he did. Now, we have long argued, and we'll repeat a summary of that argument here, that you can't beat Putin on volume. Nobody who's ever worked in commodities thinks that impeding a commodity producer's volume is a way to stunt their revenue. It's the opposite. If we cut Putin's oil from reaching the market, if we cut 50% of his oil, the price of oil would way more than double, and he would end up with just as much, if not more, revenue. The only way to beat back Putin, and the only way to impact his revenue, which is the stated purpose of the sanctions, is to flood the market with energy and crash the price, which is what we've been calling for. You cannot compete on volume. You cannot impede Putin's volume from reaching the market and expect that he will make less money. And it's just a fallacy of political thinking that can only arise from a group of bureaucrats who've never spent any time in industry. And it's unfortunate. We've tried to make this case from the beginning. We've been proven right. The Russian ruble has bounced back. He's had to cut interest rates multiple times. In fact, the reason why the price of oil is coming back in over and above the Strategic Petroleum Reserve releases, which, by the way, proves that the administration knows that the price elasticity demand for oil and that 1 million barrels a day would have a significant impact. The only way to truly damage a commodity producer is to overproduce. Commodity producers make all their money at the top of the cycle when there's very slight shortages and price skyrockets. And that harvested profit at the top of the cycle more than compensates for the valleys of break even or net losses that occur when there's an excess of supply of commodities. And so,
Doomberg, on that point, I don't know if you saw, there was a great graph that showed U.S. E&P free cash flow over the last decade, and as you correctly say, so the shale revolution yielded zero free cash flow, and all the free cash flow came in the last year and a half.
This is well known. When you're working in the commodity sector, all you have to do is never build a plant, and you'll make a ton of money eventually. Because
that's the secret.
Honestly, like if you are sitting on the production of a highly inelastic commodity that has a high barrier to entry, costs billions, takes years to build a facility, let's say, all you have to do is never build a plant and just wait, because eventually it will rain and you will harvest. It'll be a very narrow window. And then the reason why these windows are narrow is because people draw tangent lines to sine waves, and they start building the moment prices go up. And so this is the reality of the war against, again, if our objective is to impact his revenue, the only way to do it is to flood the market with cheap, abundant energy. And that's why Germany's insistence on shutting down its nuclear power plant makes Putin richer. It funds the war. It's undeniable. It enables Putin. Lawsuits in the U.S. Surrounding natural gas pipelines or the building out of LNG export facilities. This behavior enables Putin, and that's fine. But you may think that the environment is more important than stopping Putin. That's a decision, but don't try to have it both ways. If you are opposing the development of clean energy, you are enabling Putin. Just come out and say it. Don't be so inauthentic.
That's a great
about
line.
it.
You can't have it both ways. You can't have a war and at the same time say, well, not that, right?
Yeah, not anything. I mean, what are they supporting? I mean, it's really ultimately, it's very frustrating. But of course, it has to resolve. And that's why we've said how Western Europe handles the upcoming winter of 2022-2023 is the single greatest geopolitical event to keep an eye on. That has to resolve because the calendar turns, the weather changes.
Is this the Super Bowl of energy? Literally, this is the biggest event ever.
Well, I mean, you have armies of people measuring the water levels of the Rhine River because we're so tight to the wire on rolling brownouts in Germany and Western Europe. The drought, and just to connect the dots for people that may not be familiar, there's a major drought in Western Europe, and of course these things happen all at once, right? A crisis is nothing more than a combination of several serious issues that integrate into a crisis. So there's a major drought in Western Europe. The water levels of the Rhine River are dropping precariously. And why does this matter? Well, part of the plan for Germany to get through the winter is to burn a lot of coal. But to get the coal from where it's imported to where it's burned, you need to ship it via barge down the Rhine River. They can't do it now. The water levels of the Rhine have dropped below the minimum necessary to effectively transport, large cargo ships full of coal. And that's why you're seeing natural gas prices spike today in Europe, even though, and that plus, Putin is toggling the natural gas he is deciding to sell them. By the way, this is proof of the inelasticity we talked about. If he toggles natural gas and the price goes up radically, he's going to make more money, and he's going to fund his war machine. And this is so obvious and so frustrating, but it is what it is.
Doomberg, obviously, we got to talk about the great work you've done on the uranium file. Do you want to give just an overview of all? I know you've done a couple great pieces. The last one was Ontario, which kind of hit close to home because I live in Toronto. Maybe you can just give a summary of the key points that you've written on the nuclear file, and I know you're going to give a little teaser for what's coming up.
Yeah, sure. I mean, ultimately, physics demands that higher density energy sources are the quickest way to generate as much life-nurturing energy as society needs to ensure a standard of living that all of us would be comfortable with. And in the piece you referenced called Malthusian Malarkey, we had two parts of that piece. The first part was showing how the origins of the anti-nuclear movement flowed out of Malthusian anti-human thinking. This is a history that the radical environmentalists would like us to forget. We refuse to allow them to escape from their history, especially because the very policies they're advocating for today are indistinguishable from the policies that were born out of the eugenics movement and ultimately the Malthusian school of thought. And then also the same old lies about the hazardous of nuclear waste and risk of a meltdown are being bandied about as though they haven't been utterly disproven. And so it's up to them to just disprove their own history. And it's up to, and we are perfectly within our rights to remind everybody that at its core, anti-energy policies are anti-human policies, and we are pro-human at the Chicken Coop. And so the second part of that piece was the story of Ontario, which is the exception that proves the rule. Ontario almost completely decarbonized its grid. It did so in less than a period of a decade. As it stands today, more than 90% of the electricity produced in Ontario comes from carbon-free sources, led by nuclear, which accounts for about 60%, followed by renewable hydro and wind. Something like 8% of the electricity in Ontario comes from the burning of either natural gas or coal. Or oil. And it's in fact illegal to burn coal for electricity in Ontario, and they completely wiped it out of the grid. How do they do it? Nuclear power. It's not that complicated. And of course, they tried to actually go ahead and replicate the crazy policies of Germany. But unlike in Germany, luckily, the population of Ontario revolted at the ballot box before too much damage could be done. And in 2018, the Liberal Party of Canada got completely wiped out in a provincial election, almost losing party status in Parliament. And so now the second half of that piece was basically a commercial for Dr. Chris Kiefer's great work at Canadians for Nuclear Energy and their effort to try to save the Pickering, 4 reactors at the Pickering nuclear power plant, which we applauded and donated to and had our subscribers get a link so that they could donate as well. What's the point of building a platform like Doomberg if you can't use it for the causes you truly believe in? And we truly believe in nuclear power. And so we lent our platform to Kiefer's organization. And then the piece we're putting out this Friday, which we're excited about, is called Small Biggies. It's going to be a piece about the latest NRC approval of a small modular reactor by NuScale, which is a publicly traded company. We have no position, full disclosure, and we don't intend to take any. But there's a lot of momentum in the nuclear space. And ultimately, physics dictates that this is the answer, and it's just a matter of the path function of getting there. But we're excited to have played whatever small role we can play in shaping the narrative around nuclear and walking the talk and putting our platform where our mouths are.
It's almost like you're a superhero of a chicken bird that's come at the right time during. It's just.
Not the chicken we wanted, but the chicken we needed.
Yeah, exactly. It's incredible. Next time I'm gonna bring a cape for you next time. It's like in our little intro video, we in the sizzle reel that we had distributed, we had the it was a graph of nuclear reactors. Basically flatlined since the late 70s. What do you think? When a period when we should have kept going, right? Before we started, we talked about you almost need an energy crisis to get everyone's heads back in the game. Where do you think what, as a percentage of the overall energy mix, what do you think is the right mix for nuclear? Like, should it be the Ontario example? I just would love to get your thoughts on that.
I could imagine a world where 100% of energy comes from nuclear power, and that's totally attainable with existing technology. And the energy payback period would be enormous, and the flourishing of humanity would be stupendous. There is no need for any other energy source other than uranium. There is a need for materials that come from fossil fuels, and probably we're still a long ways away from heavy duty trucks and stuff being powered by anything other than diesel. But even there, you could imagine a hydrogen economy derived from uranium power. Now, having said that, given all practicalities, that's certainly not going to be anything that happens in the next several decades. But if we were starting society from scratch, we could do it. Go ahead.
And so just on that, to the transport part of that, is that the idea that it would be electric vehicles that be tapping into nuclear, or would it, or are you more, it would be something like hydrogen, or just trying to understand how you think the transport side would be addressed?
Well, okay. So first of all, like 7% of oil and gas goes into chemicals, and you can't, you need that carbon. It comes from the refining of oil and gas, and nobody's talking about oil and gas going to zero. And so you can imagine still using diesel tractors and things. In our view, hydrogen combustion engines are a far superior alternative to electric battery vehicles because of the recharge time and the critical, precious metal constraints on the production of the batteries and so on. And hydrogen combustion, where you get the hydrogen by, using nuclear power's energy to run electrolyzers, is in theory, on paper, if we were designing society from scratch, is a way that you could power much of what humanity needs. Nuclear power produces, you could orient it to produce thermal power. It can produce electricity. Like, it gives you everything you need, except for the carbon atoms that make up the materials that we use. You can't do that. Although I guess if electricity was free, we could probably extract it from CO2, but it wouldn't be efficient. And so ultimately, in the resource mix of the future, nuclear could be 70-80% of the total energy demand easily, ideally, and we could more than bend the curve on whatever damage CO2 emissions are anticipated to have over the next few centuries. This is all doable. All it takes is money and political support, but we're a long way from that. We can't even save 3 nuclear power plants in Germany in the middle of the greatest electricity crisis known in the developed world. And so, the clean sheet of paper is not in front of us, but what is in front of us are real serious milestones that we can affect, and we should, as concerned citizens, should be doing our part to try to lobby for them.
So Doomberg, while we're talking, someone on Twitter just said Mark Nelson tweeted that Germany will keep the plants open. So it'll be interesting to see if that's legitimate or not, but that's interesting.
Well, Mark Nelson is one of the most knowledgeable people on nuclear power and a great friend of the Doomberg team. And if he's saying it, then there must be something substantial that has happened just during Uranium Con. And I'm going to go ahead and give Scott and Tom the credit for it. Grizzle has delivered for the world. Congratulations, guys.
Don't forget that we're living in a utopia. Who brought you there, Grizzle?
Oh man, guys, Doomberg, this is just like, you know what? We slapped you for we need to do like a leather couch, kind of like a Saturday night, one of these late night talk shows. One time we'll do like Doomberg,
the Joe Rogan Experience type situation. Yeah.
We need a 2-hour segment.
Let's do 3 hours together. I'm all for it, and we'll even create a special gift. We'll get a cigar in the chicken's beak and a little glass of whiskey, and we'll do it from 9 p.m. till midnight on a Saturday, and we're all set.
We have to do that. We actually have to do that. Guys, thank you, Doomberg. Guys, if you haven't seen, Doomberg just brings the heat. Just wonderful, incredible source of energy, information, insights, and just futuristic thinking the right way. If you're not subscribed, do subscribe to his fast rising, and he will take the #1 spot in finance in a very short time. He's #2, moving very quickly. That's Doomberg.substack.com. Doomberg, always a pleasure. We'll see you with a cigar in your mouth next time.
You bet, Scott. Tom, it was great, and congratulations on the success, and have a great rest of the conference.
You too. Thanks,
Thank you, Doomberg.
All right, everyone, don't you go anywhere. The point of Uranium Con is to line up the biggest uranium investors and ask them the questions you want to ask. So we're just getting started. Don't go anywhere because you're going to hear from Dave Talbot. He's the head of uranium research at Red Cloud Securities. He's a wealth of knowledge. We'll be back in a few minutes.
All right, welcome back. Grizzle Uranium Con. Listen, big news here today, potentially, Scott. What's the news? So Germany's going to extend their 3 nuclear reactors?
That's the news that broke during Uranium Con. So hopefully it's legit, but that would be big news for Europe for sure.
You know what? Put us with the green chicken every morning, and your day will turn better. It'll be a brighter day. First of all, we got to thank our wonderful partners. That it couldn't happen without Uranium Con. Couldn't happen without these 3 wonderful sponsors. Started off with Red Cloud Financial Services, our lead partner. Couldn't happen without them. They are your source for high quality mining research and insights. You got to check them out at redcloudfs.com. That's Red Cloud Financial Services. Check them out. Tons of insights there. Wonderful partner for us. And then, of course, you heard him. We brought him to you, the Doomberg, the fastest growing finance Substack on the platform. He's number 2. He's going to be number 1 in a matter of minutes, man. Doomberg.substack.com. Check him out. And, of course, Sprott. They are the kings of physical commodity investing out of Toronto. Of course, Sprott.com.
Now, speaking of Red Cloud, we have David Talbot up next. He's managing director and he's the head of uranium research at Red Cloud. So what we're going to do is we're going to have a quick intro video for him, and then we're going to bring him on. We're going to talk a lot about uranium. All right, David, welcome to Uranium Con. How are you?
Hey, not too bad, Scott, Thomas. How are you guys doing today? Thank you for the invite. And, man, following a talking green chicken, that's going to be a hard act to follow. I'm going to do my best to.
Tough act to follow, but you'll do it. You'll do it.
I know it's almost like when you have like Eddie Murphy, and then everyone's like but Dave, no, it's incredible, wonderful. Thank you so much for joining us. Red Cloud Financial Services. Now, I have to ask something of our audience on YouTube. If you're watching, please give it the thumbs up. Helps a ton. Helps spread the good vibes, the nuclear vibes to all of YouTubeverse. And if you are on Twitter, please give it that retweet.
Yeah, David's going to drop a lot of useful insights on the uranium market, and so will all of our guests. So we're just really getting started. Make sure everyone knows this is going on. So David, let me start with, Red Cloud's one of our sponsors. Some people watching may not know much about Red Cloud. Could you just tell us what services do you guys offer? What should people expect from Red Cloud?
Sure, Scott. Well, my name's Dave Talbot. I'm Managing Director and Head of Research here at Red Cloud Securities. Now, for those of you that aren't really familiar with Red Cloud, we're actually a pair of sister companies. We've got Red Cloud Securities and Red Cloud Financial Services. So together, I think we're a little bit more than the traditional brokerages. And this has attracted a wide variety of firms to work with, whether they're digital media groups like Grizzle, other mining services companies, or corporate clients. So, the Red Cloud Securities is the regulated brokerage side of the business. Typical investment banking, research, sales, and trading availability. We're Toronto-based. Difference here, we cover mining and mining only, and we have extensive sales coverage, whether it's retail, institutional, alt cap. A large part of our business is market making for about 50 to 60 junior mining companies as well. That's important to keep the liquidity up. Last year, I believe we were top 3 in Canada in a number of equity financing deals. And our research team, analysis approaches, we approach companies with a technical eye. We have 3 geos on site, 1 mining engineer on the analyst team, and we wrote on about 150 different stocks last year. Now, Red Cloud Financial Services is sort of how we differentiate ourselves from every other bank or boutique. We can manage the investor relations campaigns. We can do market roadshows, conferences, webinars, podcasts, social media. I think we right now manage social media accounts for about 55, 60 different exploration companies. In-house, we've got a studio as well. We can do professional videography, website design, dedicated graphic design, company rebranding, and so on. And we've got our own sort of media like this, Red Cloud TV. And that works with CEOs to bring their stories to clients, and analysts from the security side can get their say as well. So we're trying to be a one-stop shop for the miners.
So Dave, obviously, I'm the nucleus of Red Cloud. You guys are the real deal, like rocks. For those who don't know, right? Bay Street. It's just obviously the headquarters for mining and the mining industry. But it just the big banks, they drop the ball, right, in terms of like sticking to the fundamentals of what this is about, right? You guys are the supernovas that got the business.
We're trying. I think our focus is on smaller cap companies, I'd say, let's say 250 million market cap or below. Like I said, want to be a one-stop shop here, trying to eliminate the need for them to hire several people to perform different tasks, helps them save money, effort, time, and allows them to put money in the ground. And, on the security side, we try to keep it real, bring an institutional quality research product out to the masses that's widely distributed, and lets people see the investment for themselves.
Does that mean if people watching, if they want to read the research, do they have to be a client, or can they view your research?
No, unlike some past companies I've been involved with, we are pretty wide open with our research. So,
Right.
I think you can do our research at Red Cloud let's say redcloudresearch.com. Okay, so sign up there. You can get our daily rocks every day. You can have full access to everything that we've written in the past. We're probably pushing 200 companies that we've written on in the past. You will get access to our research there. The daily comes out once a day, so you'll see the stuff new hit your inbox in the morning as well. You already put out the redcloudfs.com website. I'd also steer people towards redcloudsecurities.com.
Got it. Great. So David, you have a deep background in uranium. Maybe you could just tell investors a little bit about how you got into the uranium sector and what you've been doing over there at Red Cloud.
Yeah, sounds good. It's been almost 30 years now. I'm a geologist by trade. I worked for about 10 years in the gold exploration industry, now about 20 years in the capital markets setting focused on mining. Sort of started my background with three large gold companies in the mid-90s, Franco-Nevada, Placer Dome, Newmont. Cut my teeth in the greenstone belts of Ontario like so many other people, Timmins, Kirkland Lake, Detour, Musselwhite, Hemlo. Following that Franco-Newmont merger, I did make the jump to capital markets. So I joined Dundee in 2003. Now, sad to say here, we just lost Ned Goodman, our patriarch, last week. He was a member of Canada's Mining Hall of Fame. He was appointed to the Order of Canada. I think only one of 113 people that have received Canada's highest civilian honors. So, and Dundee later on morphed into A Capital when us partners bought out the company. So, I'd say over that time my coverage has morphed as well. Obviously, gold background, started covering gold stocks at first, but by 2007, when uranium prices really started taking off, I started solely covering the uranium sector. So that's what 15 years ago, 16 years ago now. So added the lithium sector in 2009. There was a full push into battery metals and graphite and cobalt in later years. But at the beginning of last year, I made the jump to Red Cloud Securities. And as I mentioned, over the past years, I've covered almost every North American uranium stock and some of the Aussies as well. Been to 68 countries, visited well over 100 uranium projects. As a geologist, I like working with the small companies. I like evaluating early stage exploration projects. So as a brokerage firm here, Red Cloud Securities, a lot of our clients are in these playing these smaller companies. So really Red Cloud was just a good fit.
Gotcha. So this is Uranium Con. Let's dig down into uranium. We were talking offline, you said there's 4 big issues that make this uranium cycle different than the rest. Could you explain those to viewers?
Yeah, I'd say, the uranium market's been impacted by several of these global geopolitical events and shifts in the financial markets, but there are probably 4 or 5 of them, the big issues that should be mentioned. We've got this green energy movement. We've got geopolitical events such as COVID and the Russian invasion of Ukraine. Uranium prices, they're very volatile, but they are still low. We've seen this buying of physical uranium, and we've seen disinvestment and lack of exploration, thus fewer discoveries. So, if you will, just give me a little bit of time to discuss some of these points. This green energy movement is pushing nuclear power as a solution. And I think, Doomberg just went through some of this stuff lately. I think that green energy has partially come to its senses, realized that green, clean air, baseload power is really needed. Hydro, it's pretty clean too, but it has environmental cost as well. So really the clear choice is nuclear. And I think most ESG investors realize that. So we have seen a move towards giving nuclear power credit as a green energy, more so in Europe, and this could lead to additional government and EU spending in the nuclear power industry, and that will filter down to the uranium sector as well. So furthermore, such countries as Belgium and Germany are reconsidering their stances, and you just heard Germany, those 3 nuclear power plants that they'll look to extend as well. So, I recall the day, I believe it was November in 2010, when Germany said it was going to extend its 14 reactors by 10 years, or maybe it was 10 reactors by 14 years. So it was, it was a positive move. It was incremental to the sector. It wasn't huge news because Germany isn't the be all end all of nuclear power. It's not a huge user, especially today. But at least what it became was a poster child of the West and how the West thinks of nuclear. Or some of the West. So, definitely positive news there. So, geopolitical events. We're talking about, namely about COVID, which is sort of in the past for us a little bit. I think we saw some variability since March of 2020, and that did force some production offline. And there was a price correction from $25 to $30. So we started to see a move. But I think this Russian invasion of Ukraine did have massive impact here, and prices essentially went from $40 to $60 pretty quickly before settling down to, let's say, 47.75 is the UXC price today. But we can get more into that later. But bottom line here, uranium prices, they're pretty volatile. They are still pretty low, such that there's limited production, essentially no small cap production in the sector. I'd say probably
Hey,
4
David,
years
just
ago.
quickly, you mentioned what do you think is the right uranium spot price to start incentivizing this exploration you're talking about?
Yeah, I think we're probably looking towards $60 or higher. If you are looking at, where these where these power, let's say, start again, where these uranium mines started shutting down, in the past post Fukushima era, I'd say they started shutting down in the 70, 60, 65, 50 range over the past decade. So maybe you need to consider the inflationary environment we're in as well. So perhaps a little bit higher than the $50, $60 range is required, but in that ballpark.
Got it. Okay. All right, go ahead with the other points.
Yeah. So okay. Let's see here. Forgive me.
So I guess the one thing I was going to ask you, Dave, just big picture here is there's a question here like. This is from YouTube. Guys, if you guys want to ask questions, please drop that into the YouTube chat. The question is, talk about the bifurcated market, East versus West. But what happens if the war were to end tomorrow? Uranium price sanctions on Russia. I'll give my quick 2 seconds. Would love to get your take. I think the war has really identified for us the fact how ill prepared we are for this to happen and potentially could happen again. I think this has really spurred the nuclear independence movement.
Yeah, absolutely. I think very poor relations between Russia and the U.S. have really instigated the issues or brought them to the forefront in the uranium market. Right, we have this risk of banning uranium deliveries into the U.S. Possibly with the risk of banning Russian-owned Kazakh uranium as well. There could be disruptions of the Kazakh uranium delivered through Russia. And there could be a general ban of uranium on the market itself. So that would be problematic, I think. It would result in about an additional 15 million pound deficit next year, probably 5 to 10 million pounds between the year 2024, 2027, just in the US. So, when the conflict began here, that, we saw a wide $40 to $63 swing in uranium. I do believe there's a slight premium built into the current price right now, but we might get that bifurcated uranium price with this different source emerging. We might see different prices for Western uranium, for Russian uranium, much like there was in the early 90s, 2000s due to the Russian HEU agreement. So, I think perhaps utilities will focus on buying Western uranium as opposed to, let's say, Russian or Kazakh or Uzbek uranium going forward.
David, as we look at the here and now, is uranium market kind of like gas, where we can't really afford to sanction Russia and cut off uranium supply because there's just not enough elsewhere to supply the utilities at this point?
Uh, I wouldn't say it's like oil and gas. I think, there is potential for the U.S. to go out and find uranium elsewhere. It certainly will be a little bit of shock to the market. There will be higher prices involved. Do I think the situation will revert to the back the way it was, even if hostilities go away? Probably not. But you know what? I think the U.S. will probably go forward and seek to reduce its foreign dependence on uranium, whether it comes from Canada or Australia. I think they will focus a little bit more on the domestic industry. They're for example, they have put out RFPs out there to several of the uranium companies to actually go out and offer product which is going to go into that new U.S. federal uranium reserve. Now, it's only going to be a couple £1,000,000 per year. So it's not going to make or break the industry, especially when the industry is about 177 million pounds globally. But it certainly is a start. It's a positive start, and that's a couple small ISR mines in the U.S.
Gotcha. Maybe should we talk about stuff?
Oh yeah, well, so Dave, you run the research department at Red Cloud. You bring great insights on the stocks in this space. Would love to hear the stocks that are of interest to you.
Okay, yeah, there are several of them. I want to make sure I get the disclosures right, so I will state those as well. But let's go through them relatively quickly here. I think our top pick right now is Global Atomic. We have a buy $7 target price on this. This is a Red Cloud Securities banking client. Like I said, it's our top developer pick here. But this is a near-term producer in Africa, looking to produce about 5 to 6 million pounds annually. Phase one is only about 44 million pounds over 9 years, but they've got well over 100 million pounds in resource here, amongst the highest grades outside of the Athabasca Basin of Canada. They've got potential to deliver development ore to Orano, formerly Areva, who have operations nearby. Pre-construction has begun. Probably will get the full go-ahead by year-end. They can probably make money as low as $30 a pound, but they're going to need 208 million capex here in the short term. But a large part of that has already been put forward by the government of Canada, the Export Credit Agency. So more of a junior explorer, I'd say Valor Metals. We have a buy $1.05 target price on that one. Another Red Cloud banking client here. This is our top exploration pick. They've got a couple different projects and a couple of different commodities. They're looking at the Pedra Branca project in Brazil, and that's a PGE project. But the Angolac uranium project in Nunavut territory is sort of their key focus right now. And this is notable because they've got 43 million pounds. It grades about 0.7%. It's amongst the highest grade outside of the Athabasca Basin. We think it's going to continue to grow significantly, much like they grew that PGE resource out there as well. Some of the other notable names out there, NextGen, we don't currently rate the stock right now, but they are permitting what will likely become the world's largest uranium mine in the Athabasca Basin. It's probably the best deposit on the planet, in my opinion. Very high grades, and unlike other large high-grade deposits, this is in the basement. So that means competent rocks, conventional mining, means long life, low costs. They're probably going to need about $1.3 billion to put that into production. That's Canadian, so let's call it $1 billion. Energy Fuels, we've got a buy 16.25 target price there. Largest U.S. producer, will need some money to ramp up its rare earth element production. They're starting with mixed carbonate, but want to do oxide separation, so they're probably going to need, say, $200-300 million here in the short term. But don't don't get confused. This is not a rare earth company. It is a uranium company. They are still pushing for, they've got all sorts of assets throughout the Western U.S., whether it's ISR in Wyoming or Texas or elsewhere. They've got, the mill is the only operating mill in the U.S. in Utah, and they've got all sorts of mines that can feed that through Colorado, Utah, Arizona, and the like. So, Encore Energy. We've got a buy 275 target price there. This has a Red Cloud investment banking client. They've got potential to become the leading ISR company in the U.S. as well. Existing CEO is Paul Goranson. He's past president of the Uranium Producers of America. Very, very well connected, as is most of the people in this group. Lots of operations experience, which is sometimes hard to find in the uranium space, and two existing ISR plants that they're upgrading, currently drilling off some nearby deposits. Another company in the U.S., or at least focused on the U.S. right now, Consolidated Uranium. We have a buy 415 target. It is a Red Cloud investment banking client. Their original strategy was really to consolidate projects across the globe. Initially did that by gaining rights to the projects and signing options down the road when the company was bigger, and that worked for them. But I do think that the company has taken the next step, and they've upped the acquisition game, partly in conjunction with Energy Fuels here. So they've acquired 3 mines close to Energy Fuels mill, the White Mesa mill that we were talking about, and they're going to get help from Energy Fuels putting them back into production. So this puts Consolidated squarely in the developer, if not near-term producer camp there as well. One other developer here I want to talk about, Lotus Resources. We have a buy 30-cent target price. They're essentially putting Paladin's past-producing Kiwakera mine back into production in Malawi. They need about $88 million to get it restarted, but they've increased resources. Lots of upgrades were made to the plant, or will be made to the operation, to reduce costs. They're connecting to the grid. They're going to use ore sorting, tailings improvement, acid improvements, better efficiencies, and they're redoing the mining schedule. So a lot of those rock issues they had in the past, they're going to hopefully improve on by staying out of the mudstone, essentially. And then very quickly, two more small guys in the Athabasca Basin. ISO Energy, not rated. This is another explorer. They just put out their initial resource, 52 million pounds at 35% uranium. That is the highest grade deposit in the world, bar none. In fact, it's probably highest grade by double. Okay, so that's one to watch. Another one, Canalaska. We have a speculative buy on that. No target price. That is a Red Cloud investment banking client. It's a smaller company, but they're focused on the basin. It has a JV with Cameco that they just made a 6.3 meter wide discovery of high grade just west of MacArthur River, which is the world's highest grade mine. It's near Fox Lake, Cameco's Fox Lake, which is 68 million pounds, grades 8%. We're still waiting on assays there, but the basement rocks there look really good. It looks like something you'd see at Eagle Point or Millennium or one of the, maybe even Arrow. So
awesome. Well, David, man, that went by quickly, but thank you for telling us about some of the stocks that are interesting to you, telling us more about Red Cloud and also about the uranium market. I can tell we've just scratched the surface, so we'd love to have you back to talk more at length about what you're seeing and what you're thinking. But thank you so much for your time. We really appreciate it.
Yeah, thank you, David. And the broad mining markets, you guys don't know, Red Cloud is filling, it's filling a much needed void in great mining research, mining banking. That's so two websites, redcloudfs.com and redcloudsecurities.com. Dave, thank you very much.
Okay, thank you, Scott, Thomas, pleasure. And yeah, I'd be happy to be back.
Wonderful.
Great. All right, everyone, you better not go anywhere. We got a juggernaut in the uranium space. Sprott, the CEO of Sprott Asset Management, they run the largest uranium fund in the world. He's going to be up next to talk about uranium, answer our questions. Should be a really good one. We'll be back in a few minutes. Don't go anywhere.
Welcome back, Grizzle Uranium Con. It's coming to you. We brought the heat. An incredible schedule all day. Scott.
All right, so we're joined here by John Ciampaglia. He's CEO of Sprott Asset Management. We're going to play a quick video and we'll bring him on. All right, John, welcome to Uranium Con. Great to have you.
Hey, thanks for having me. I didn't know it was hat day.
Yo, you know, we treat it like the NFL draft. It's the best. We bring on the best. Team Grizzle, you know what? We bring that heat, you know?
Yeah,
That's
exactly.
funny because
You've seen our other conferences. Always got the
I came to my
hats.
office today and I had this hat on my desk. They gave out these new Sprott hats. So I'm not sure I'll wear it today, but
nice.
I'm feeling the hat love.
You're gonna have to send us one of those lids. We're collectors, as you can see here.
Yeah, we just keep collecting back there.
First of all, for those watching, I do have to say, please hit the thumbs up. We've got a true legend here. In terms, no one does it better in commodities than Sprott, and we're very thankful to have John with us. So please hit the thumbs up if you're on YouTube and Twitter. That's our fam. You guys know. Give it the retweet.
All right, so to kick things off, if you don't know, you should know, Sprott manages the largest uranium fund in the market. SPUT is the ticker, Sprott Physical Uranium Trust. So can you just kick things off, John? Give us a quick explanation of the fund's objective and the mechanics of the fund. How does it work so that people know what they're getting if they're buying SPUT?
Yeah, sure. Well, thanks for the intro, guys, and kind words, and thanks for having me on. The Sprott Grizzle Uranium Trust is a very simple creature, and I think that's one of the beautiful things about it. We launched the trust in July of 2021, so we just passed our 1-year anniversary, and the growth trajectory of the trust has been astounding given the investor response we've received around the world. It's an investment trust that holds physical uranium, which we refer to as U3O8 or yellow cake. We started the trust by acquiring Uranium Participation Corp, which brought about 18 million pounds of U3O8 as our starting base, and over that period of time, we've grown it to just over 57 million pounds. So just to put it into context, people might say, well, what does that equate to? 57 million pounds of U3O8. Essentially, the trust has enough uranium to power all the nuclear power plants in the United States for about a year. So it's an enormous amount of stored energy that the trust is now sitting on. We hold that in 3 different facilities in Canada, the United States, and France. We raise capital when we can do so accretively, and we take those proceeds and we basically shop the market for more uranium in the spot market. And that's how we've essentially been able to grow the trust from about 600 million in assets in July of 2021 to I think we're at 2.8 billion right now.
Wow. You're the dawn of yellow cake.
I haven't heard that one yet. I do have some funny memes out there that my kids think are absolutely hysterical, but I haven't heard that one. But yeah, it's been a fun ride. There's a lot of very interested investors in uranium, and yeah, I mean, Twitter is just a ball of fun, and there's a lot of individual investors. But what I can tell you is that the most of the money that we've raised, the 1.85 billion, has been institutional. We know that because we speak to these institutions. They express their conviction in the thesis, and then they put their money where their mouths are, and will give us 20 or 30 or 40 or 50 or whatever $1 million orders. So it's a very institutional focused theme right now, but that doesn't mean there's not a growing number of individual investors. And these institutions came to us for one reason, and they saw the imbalance in the uranium market. They basically saw a 9-year bear market that created a situation for a critical mineral that got us into a situation where only 130 million pounds were coming out of the ground each year, when the global need is 180 million pounds to keep all the 440 odd reactors operating. And the thesis was, well, something at some point is going to break here. And with the big movement that we saw last year with energy transition, they thought that was going to be the catalyst to really help the market come back into equilibrium. But it was really the Feb 24 invasion of Ukraine that really just changed the whole game board, if you ask me. And we went from a thesis driven by a structural supply deficit and energy transition to energy security and independence, which I think is much more powerful. And sure enough, just today, about half an hour ago, I saw the Wall Street Journal published a report saying that Germany has decided to keep its last 3 nuclear power plants operating beyond December. And at the end of the day, it's only 3 nuclear power plants, but I think it's hugely symbolic in terms of the U-turn shifts going on right now, whether it's Japan, the United States, the UK, France, Belgium, Netherlands. They're all doing U-turns right now on their nuclear energy because they are concerned about longer term, keeping the lights on, where they're buying their energy from in terms of friendly versus non-friendly nations. And as a politician, yes, nuclear energy is a polarizing topic. And unfortunately, a lot of them over the last 20 odd years have been on paths which have been to kind of not support nuclear energy and either through policy or subsidies and a lot of these power plants have been under a lot of pressure. So the policies have just completely flipped. And I think it's reflective of their concern, which is if people don't have their lights on and people don't have heating in the winter, politicians are obviously on very thin ice.
So, I think you brought a great point here, right? Like when we look at the last build out of nuclear plants, right? That was during, it was an energy crisis that drove that. How significant is the current nuclear power renaissance in the context of the ongoing global energy crisis? And just a corollary to that, could you provide a historic backdrop of uranium supply and demand, starting from the 70s to where we sit now? I just would love to kind of maybe look at a little bit of a history perspective.
Yeah, sure. Well, it's we think there's a very interesting parallel in terms of what was happening in the mid to late 70s and what is happening right now. And if you go back in time, and I was dating myself here, but I clearly remember seeing very large lineups at the gas stations when there were shortages, and the price of oil really broke out of what was then a very tightly controlled price by the big oil companies around the world. And when OPEC basically wrestled that pricing power away from those oil companies, and oil started to double and triple and change the whole dynamic of the marketplace, that was really the wake-up call for a lot of governments in the West to say, look, we need to come up with reliable local sources of energy, so that we're not beholden to these nations, and we're not at the risk of being cut off from critical energy. So that really was the catalyst to kick off a lot of the build-outs that happened in the late 1970s and 80s. A lot of the nuclear power plants that were built then, believe it or not, they're still operating, and they've been operating problem-free and carbon-free for decades. And I live in Toronto, and I'm very fortunate that the province of Ontario, where I live, has made huge investments in nuclear energy. I think something like 70+% of our energy in our province comes from nuclear energy. So we've had a very reliable and low-cost energy source for many years because of that. But it's not the case in other countries. I'll point to Germany right now, which always has kind of held itself out as one of the greenest countries and most progressive. They are burning more coal than they've ever burned. And they're kind of going back in time. They're going back to 1900 right now in terms of burning coal, and probably going to be burning individuals a lot of wood in wood stoves this winter because of the pending natural gas shortages that they're going to be dealing with.
Sean, how ironic is that, right? The Green Movement pushing to limit nuclear in Germany, and now the Greens we're sitting burning more coal in Germany than ever before.
Yeah, it's really sad to see. And listen, I'm progressive, and I believe in sustainable and renewable energy. But the reality is that countries have learned difficult lessons over the last couple of years, that over relying on solar and wind are a recipe for disaster, because you just cannot control the elements and the weather conditions, and intermittency is a big drawback. So if you need to provide a backup source of reliable baseload energy, you really have three choices. You can have nat gas, you can have coal-fired plants, or you can have nuclear. And unfortunately, a lot of the nuclear power plants, which have a great track record of providing reliable and affordable energy, have not been helped by government policy, and we're just starting to see that shift. Whether you look at the infrastructure bill in the United States, the recent Inflation Reduction Act, which I always get a chuckle out of that title, but more importantly, there's financial support and there's regulatory support coming from these governments for nuclear, because they realize that they need nuclear to complement the build-outs that will continue in renewables.
So, this is a great segue to a question from YouTube. So guys, if you want to ask questions, Twitter is terrible. Go right to YouTube. I see that, and it's good. Nico asked a great question here, which is a segue to your key points. How important is the ESG is the ESG movement warming up to nuclear? Do you see that we're at a start of actual lasting shift of climate financing for nuclear? I thought that was actually a very interesting question, and I know you're probably closer to some of that on the institutional side.
Yeah, well, the reality is you just don't want to be put in the penalty box, and then for a while nuclear was put in the penalty box, and I think if you look at what's finally happening in the EU with the passing of the sustainable finance taxonomy that includes natural gas and nuclear, those are really helpful, because they do provide preferential financing to nuclear, whether it's a new build, whether it's helping an existing plant stay open or to upgrade itself, or to finance the next generation of reactors, which are small modular reactors. So, it's not so much that, these things are being heavily subsidized, but, the solar and wind farms that were being built were subsidized for the last 20 years. And nuclear wasn't really getting any credit, whether they were tax credits or carbon credits. And now the politicians have clearly realized that, hey, we've been kind of punitive to nuclear. Let's just put it on equal footing to some other technology so that these things can stay in operation and provide that, reliable baseload power. So I do think it's important. I think, in the Inflation Reduction Act that you just saw, there is a credit of $15 a terawatt hour or megawatt hour, to support nuclear United States. All these little things help. They help power plants stay in operation. They help them become more viable for longer periods of time.
Hey, John, I just wanted to confirm that news we got on Germany today. Are those the first plants that were going to be decommissioned, and now they're doing a U-turn on them?
Yeah. So Germany's been basically decommissioning their power plants for a number of years. At the beginning of 2022, there were 6. They closed 3, and the last 3 are operating right now, and we're scheduled to close at the end of this year. So, I haven't looked into the details yet, but I almost wonder, whether these 3 will continue to operate, and perhaps the 3 that were just closed 7 or 8 months ago, perhaps they even get turned back on if they can source the fuel. So, I think, again, these are just, small samples, small numbers of power plants, but I think they're hugely symbolic. The other one that's, I think, hugely symbolic as well is Diablo Canyon in California. This is the last remaining power plant in California, produces 8% of the state's power. It's incredible. And it was scheduled to close in 2025, and the governor there just did a complete flip-flop and said that they're going to be financially supporting the utility there under a long-term extension. So, this is all happening. So, yes, it's symbolic, but, the way we think about it is every power plant in the world, on average, every year of operating life, need about 500,000 pounds of uranium. So if you think about, okay, this power plant is going to go for another 5 years, I think of it as, okay, where's the 2.5 million pounds of uranium coming from? Because someone needs to buy it. So I think all of these developments are very positive.
So, John, I know there's a lot of people new to uranium, nuclear. I think one thing we probably should do is just provide some, an outline of what help people understand the nuclear fuel cycle and the different prices of uranium conversion and enrichment. I think that would be really helpful. I know we're going to put up a little visual as well to help you talk through that. But I think that's important, and you play a very important role in you understand this very well.
Sure. Yeah, I think this is really important. And this became highly important on February 24th. Utilities obviously are, this is what they live and die by in terms of the nuclear fuel cycle. But for most investors, I don't think they got so deep in the weeds in understanding this. And the reason why this became so important to understand on February 24th is because of Russia. So if you think about where Russia fits into this fuel cycle, let's start at kind of the beginning of the cycle, which is mining and milling of U3O8. The reality is that Russia, through mostly JVs, only produces about 14% of all the U3O8 in the world. So if you take them out of the equation, it doesn't have a huge impact on the supply chain. But if you go down the fuel cycle where they take U3O8 and they convert it into UF6, the capacity that Russia provides the world is 27%. So now it's starting to become a little bit more material. But then go down one more step in the fuel cycle to enriched uranium, and Russia has 39% of global capacity. And so you might say, well, why do they have so much global capacity? And the answer is simply, in the bear market, a lot of the capacity in the Western world was shut in because prices were so low and utilities pivoted to cheap Russian services, And so, for example, you've got a facility in Metropolis, Illinois, that ConverDyn runs, that's been closed since 2017 and is just in the process of reopening, but it will take time for them to build capacity and also build, more importantly, a contract book to justify the investment they need to reopen that idle capacity. So the utilities are trying very hard to figure out where do they source alternative supplies of nuclear fuel. But the reality is in the very short term, there is no readily available spare capacity. So we've got this situation for the next 12 to 24 months. And we're seeing this play out in the price in spades. So if you think about the price of U3O8, which is what the Sprott Physical Uranium Trust holds, the price of uranium this year is up about 10% as of today. It was up much higher before we got caught in the kind of macro correction. But if you look at the prices of conversion and enrichment, where I said that Russia has a much greater impact in capacity, the prices of conversion this year are up over 50%. The price of enriched uranium year to date is up over 120%. So it's having an immediate effect. And one of the key things that was very interesting to me, and I'm sure most people are unaware of this, the way utilities actually procure fuel is they start backwards. You think you would start with the basic element and work forward to, they actually do it the reverse. They contract to actually hire companies that fabricate the fuel rods, and then they contract for enriched uranium, then they contract for UF6, and then they buy the physical uranium that almost starts the whole process. So it's a very different process of buying. It's totally counterintuitive, and it explains why the components in the fuel cycle that are closest to being in the reactor have been the most impacted by the world going upside down since February 24th. So I think that's a very interesting dynamic. Now, what we think is going to happen
John,
is
could I just...
Yeah,
sorry to interrupt.
sure.
Could I ask quickly, investors, if they want to get exposure to those different pieces, are there public vehicles for enrichment companies, for example, or you really you have to buy the mining side, or what are their options?
Yeah, I mean, there are no funds out there that will hold UF6. I mean, we did have a little bit at one point that we swapped, but it's very, I'm not aware of any vehicles where you can hold UF6 or enriched uranium directly. There are companies that are involved in processing. I mean, Cameco is a vertically integrated company where you gain some exposure, but at the end of the day, they're really a miner. That's where most of the revenue comes from. But they do have these other services, which I think makes them very important right now and very sought after by utilities. So it's not super easy to get exposure to the other parts of the fuel chain.
So there's no pure play enrichment company that you know of?
Yeah, there are some companies out there, and I'm not going to mention them on this event, but companies do have exposure to different parts of the fuel chain. Most of the companies obviously are dealing with primary production, but just going back to my earlier comment, was this kind of reverse cycle we think is eventually going to cascade back down to U3O8. And we're starting to see lots of signs of that right now. I mean, Cameco, I think, is the best proof point. If you think about how many pounds of uranium that Cameco has contracted to sell from the beginning of January 2021 to today, it's 75 million pounds, which is, I think, a very strong signal that utilities are kind of saying, hey, we need to renew contracts and rebuild our inventories, particularly now when they're starting to get more and more nervous about supply chains and where they're sourcing uranium from.
So, John, that's an interesting point here, right? That's a dynamic I didn't quite, understanding the different, how the prices move and, how ultimately it'll come back. Now, I think very few people, the understanding of how utilities interact with uranium. Could you help us understand that dynamic and how they contract? Because I think that's an important component here, the long-term nature of that.
Yeah, it's a really good question, and it's another nuance about the uranium market. If you think about running a natural gas power plant, you are basically beholden to the market every day because you're pumping in natural gas through a pipeline every single day to fire your plant. So if the price spikes or there's a shortage, you're basically at the mercy of paying the market price. So if you think about what's happening in Europe right now, the price of natural gas has increased exponentially because they don't have any other choice given the tight market dynamics. If you think about a nuclear power plant, it is the complete opposite. They don't have a just-in-time model because they're constantly buying through long-term contracts and storing uranium so that they never get caught short. You never want to have a nuclear power plant not be able to operate. So you always have typically about 2 years of inventory hanging around, partially because you don't want to get caught, partially because that fuel cycle takes many, many months to go from U3O8 to actually, fabricated fuel rods. And the second point I'd make is that once you load your fuel into your reactor, the typical power plant will run for 18 to 24 months nonstop. So you're not at the mercy of the market in terms of price spikes, shortages, sanctions, whatever. And that's the other beauty about nuclear energy is that once you turn these things on, they go for extended periods of time. So, is the price of the commodity moving during that period? Absolutely. So you got to, as a utility, you need to think about the price you're going to pay. You need to think about where you're going to buy your uranium from and all the other services so you're not caught 2 years forward. But, the other key point I would make to highlight is that if you're running a nat gas plant, 70% of the total operating cost of a nat gas plant is actually the fuel itself. If you contrast that with a nuclear power plant, it's about 5%. So the fuel is 5% of the total operating cost. So, this is why we always say uranium is kind of a recession-proof commodity because you can't substitute it, you can't really thrift it. And the reality is if the price were to double, yes, your operating costs of the plant might go from are going to go up 5% if the price were to double. But the reality is you're going to pass that cost over to your consumers and you're not going to turn your power plant because you're no longer, you're not going to turn it off because you're no longer economic. So it's a very durable commodity and a recession-proof commodity over the long term.
It's great. And fantastic questions. I think we were talking about it, John. The knowledge level of uranium investors. When I think about any other market, it's incredible. How well they know the market. So Jeff asked a good question here. Any intel on regarding expansion in North America for U3O8 conversion processing and timeline for new conversion of facilities? I think it's an important thing in the context, obviously, with Russia's, with the Russian invasion in the Ukraine. How should we think about that, and maybe we can think about that in terms of also how that impacts, the uranium price as well. I would say that at a surface level, that has to be good, right? You're pulling that capacity when I think down as it impacts what you guys own.
Yeah, sure. Well, I think there's a few points to highlight there. One, a lot of this structural supply deficit that's been in place in the market has been met by basically underfeeding in the process to produce end uranium that they could recycle back. And a lot of market participants believe that if there is a way to expedite this transition away from Russian services to Western services, that the market is basically going to lose this underfeeding supply source. And I think that's the first point to highlight. But the second point is that it doesn't happen overnight. And the reason why it doesn't happen overnight is that plants like the ConverDyn plant in Illinois have been closed for 5 years. So, these are very complicated operations. You just don't, push a few buttons and the plant starts up again. They've been idle for years. They need to basically retool, make big investments, and obviously bring people back on board. And that process is going to happen. But I can tell you that, at the last nuclear fuel supply conference I went to earlier this year, they were very clear with the utilities. We need to see an incentive price that makes economic sense to our shareholders and stakeholders. And we also need long-term contracts, or we're not making these investments, because they don't want to be stuck like they did in the last cycle, over-investing and then going bankrupt, which is exactly what happened. So it's going to happen. But one thing I need to tell the audience is that, the nature of nuclear and uranium is very glacial compared to other commodities. You can have nat gas basically go through the roof overnight because of the nature of the way the fuel is stored and procured. Things in nuclear happen very slowly. So sometimes we get investors saying, well, why isn't the price going through the roof right now because of this news or that news? And it's just, I try to explain as best I can. The market dynamics are very different in terms of the way they procure the just-in-time. The just-in-time inventory is not something that works with uranium and nuclear, and so it has very different characteristics than other commodity markets, which are very sensitive to short-term events. But I think the industry. Yeah, go ahead.
Oh no, go ahead. I want to let you finish your thought there.
Yeah, I mean, my last thought is, and I think a powerful one, is that the Department of Energy of the United States a few weeks ago requested to Congress $4.3 billion in funding to support the transition away from Russian nuclear fuel services to domestic. And I think that tells you the U.S. government is quite nervous about whether the ecosystem is going to be able to do this transition on their own, or whether they're going to need financial support from the federal government. And so I think that's a very interesting development as well.
Now, just final point here. I know obviously we could keep going. Great insights. Now, Sprott recently acquired the uranium miners ETF in late April. Could you provide a quick overview of that product and how should investors think? Because I think this is an important question, right? People think there's the uranium mining equities and then there's the Sprott uranium trust. How should an investor think about both of those when they think about getting leverage into the uranium trade? Because that really is kind of what it boils down to. You can either get your physical exposure through your trust, or you can own a set of miners either through your ETF, or they can go out and buy the individual miners. But I think a lot of people have trouble differentiating what the risk characteristics of either, and where the leverage is.
Yeah, sure. Great question. So, I mean, we're believers in both sides of the sector, meaning the market is not homogeneous. We have investors that have a bullish thesis on uranium, and they say, look, I just want to get exposure to the spot commodity price. I don't want to take other risks on, which inherently come with investing from the mining side of the equation. Other investors say, look, I'm really bullish and I want to get maximum torque or beta to the theme because I want the optionality and the operating leverage that comes from a lot of these mining companies. And so you can invest in the producers, the developers, which David talked a lot about, and then some of the early stage exploration companies. They behave very differently because at the end of the day, they're stocks. And mining stocks, have moderate correlation to broad stock markets in general, but they also have obviously specific risks relating to their operations, their development, construction, geopolitical risks, et cetera, et cetera. So for people that are I think, have a higher tolerance for risk, some of the producers and developers and explorers, I think, are really interesting right now. Because we do see a sector that's in desperate need of recapitalizing itself. Earlier you mentioned about U.S. uranium production, and I mentioned at the beginning that the U.S. fleet of nuclear reactors needs about 50 million pounds of U3O8 each year. Last year, the U.S. produced 21,000 pounds of U3O8. So why is that the case? Well, you go through a horrible bear market. You have an incentive price that doesn't allow all these mines to operate, and they're basically, they're on care and maintenance. But I think we're getting close to incentive prices where you're starting to see these companies being able to put these operations back online. I mean, McArthur River is going to come back online in the next year or two. You've seen Paladin and Boss both announce that they're going to be bringing mines back online in Africa and Australia, and I think that's a really healthy sign. It's not a sign of, oh, this is a supply response and it's going to weigh down on the price. I think it's the total opposite. This is about the health of an industry coming back after a 9-year bear market, companies able to raise equity capital, restart mines, build new mines, and get future supply online, which is critical for the sector. So I think it's a very healthy sign. So, we're agnostic. People can decide if they want exposure to the commodity or whether they want the miners or they want some combination thereof.
That's super helpful. Like the great overview of how investors should think about it. John, obviously, we got to do this again very soon. Clearly, we're living in dynamic times. Uranium Con couldn't have come at a better time with the German plans coming, being extended. John, I want to thank you for all the great insights. We'll do it again soon. For those who don't know now, Sprott is the headquarters for physical commodities.
Yes, so if you're looking to get exposure to uranium, check out their Sprott Uranium Trust, or we have the Uranium Miners ETF. So 2 ways to get exposure. I would look into those.
And obviously, you're the kings of gold and silver. So that goes without saying.
Yeah.
John, thank you very much.
Thank you for having me. It was great.
All righty, everybody. The uranium train keeps on rolling. Next, we got a very interesting guest. This is someone a lot of you in social media may know. You might subscribe to him. You might listen to him. It's Justin Huhn. He's the founder and author of Uranium Insider. So he talks all day, every day about uranium. He's going to have some knowledge to drop on us. We'll be right back in a few minutes.
Grizzle Uranium Con, thank you very much. We got a big crowd. Thank you for all the phenomenal questions on YouTube.
Great questions, everyone. Great
phenomenal.
questions.
If you are on Twitter, they've botched that platform. It's terrible to ask questions over there. Please send them. Please come over to YouTube. Ask them over here. And if you are on YouTube and you're enjoying the phenomenal set of speakers we've had and we are about to have, please give it the thumbs up. And we'd request that you subscribe to Grizzle as well. We had Resource Con not that long ago, and now we're doing Uranium Con, and get ready for much more in the future. Also on Twitter, fam, if you could do the retweet, that's all of our playground, including our next speaker.
That powers us up to our next conference.
Yeah, exactly.
So we're actually excited. We have Justin Huhn on, and he's the founder and he's the writer of Uranium Insider. A lot of great insights on uranium. So we're excited to talk to him. We're going to play a quick video, and we'll be right back with Justin. All right, Justin, welcome back to Uranium Con. Good to see you.
Good to see you guys. Thanks for having me.
Okay, so Justin, first I want to know, how did you get introduced to the world of uranium investing? And more importantly, how did you survive that 9-year bear market that it looks like it's firmly in the rearview mirror now?
Well, luckily I wasn't invested in uranium for the bulk of the bear market. So I kind of came to it at a good time. I actually was introduced to the long uranium thesis, let's call it, right around the bottom for the commodity, which was towards the end of 2016.
Awesome.
And it came to me via a podcast I had been listening to called Wall Street Unplugged with Frank Curzio. And he had interviewed, I think it was Jordan Trimble from Sky Harbor Resources. And he kind of laid out really kind of the 30,000 foot view of why he felt at the time uranium was a good investment. Of course, in hindsight, we still had a couple of years to go before we really cleared through a lot of overhead supply and mobile inventory. But, that was the bottom for the commodity. And the thesis was really compelling to me. Prior to that, I had been primarily a trend following trader, where I would focus almost entirely on technicals and very, very little on fundamentals. And towards that moment in time where I found the uranium thesis, I had started to pay more attention to fundamentals even within technical trades, and found that if I understood why a chart was behaving the way it did, whether that was a bullish earnings call or some positive development for a company, whatever it might be, that was kind of some wind in the sails for a technical chart that was breaking out. And then this thing came to me and it was like, oh, here's a sector that's absolutely destroyed. Nobody cares about it. Everybody thinks it's dead. It's never coming back. Everyone hates nuclear. Uranium is $18 a pound and it costs $40 to $50 a pound to pull it out of the ground. The sector is dead. And here's a contrarian opportunity, totally different style of investing than I had ever done. And looking back at the previous bull market, you had companies go from pennies to multiple dollars, huge returns for patient contrarian investors from, let's say, 2003, 2004 to about 2007. The sector went on a massive run that made a lot of people very wealthy. And so that spiked my interest as an investor, of course. There's this very low stress, long-term play that I could learn about, accumulate shares of, and just be patient with. And that really attracted me. Just my personality and my way of being really kind of took to that type of investment. And over the years of kind of studying the sector, I really realized that I had nuclear all wrong. I really didn't understand it. And to compare it to, let's say, a nuclear engineer, I still don't understand it. But relative to most people who think that nuclear is the most dangerous form of energy, it's precisely the opposite. It's the safest ever. People think that the waste is a huge issue. It's not. And it's a growth sector. It's set to grow anywhere from 1% to 3% per year for the next 10, 15 plus years. So I've since then become just a staunch advocate for nuclear energy. I think that I'm one of a number of people, and I don't remember who I can attribute this directly to, but basically, if nuclear was discovered today, it would be hailed as the great new, savior of humanity, basically, and that there would be much more interest backing it. But all of that is to say that the sector is very exciting, and that's how I came to it. And over the years, I've built up a wonderful community, both on Twitter, through the newsletter, and now there's just a fantastic base of retail and institutional investors that are watching this while it's still very early. It's still largely an unknown story in the grand scheme of things, yet the fundamental case for being long uranium with a backdrop of increasingly strong fundamentals for nuclear energy going forward has never been stronger.
That's a really good way to put it. So, I bet there's a lot of people watching that do follow you and know Uranium Insider, but there's definitely some people following that may not know Uranium Insider so well. Could you just give us a brief overview of what Uranium Insider is? What types of content do you offer subscribers?
Sure. Yeah, we publish a monthly newsletter that's very in depth. It's usually about 30 to 40 pages. A lot of macro fundamental news, as well as we cover all of the companies on what we call our focus list. That's 10 companies, 11 positions right now. We also have options positions. We seek out the best risk reward opportunities in the space. We have a process for choosing those companies. So we have this focus list of investment recommendations. We publish a monthly newsletter. We send inter-month bulletins via email and SMS text based on company fundamental news or macro moving news that is timely. And then we also have monthly members-only webinars, and these are usually around 2 hours in depth with myself and my partner, where we go deep into the sector, talk about the companies, talk about all of the fundamentals affecting the investment. And really what it comes down to is primarily we distill down the vast and complicated web of information surrounding this investment and this sector into what that means for investors and how they can best not only stay in this investment despite the volatility, but be positioned well enough to benefit from it when it does move.
Great. So you spend a lot of time looking at the stocks and actually thinking about, how am I going to make money on this, which is, it's a different skill than just understanding something from a high level and investing in bigger themes. So what I want to ask you is, are there certain periods in the uranium investment cycle when it's better to own the miners versus the physical uranium and vice versa? And do you have a strong preference either way?
Well, I think that really has to do with your risk tolerance. Over a long enough period of time, generally speaking, the miners should outperform the metal, as they do in most sectors. Now, in bull markets, in most resource bull markets, the miners will typically vastly outperform the underlying commodity. And I do expect that to be the case for uranium as well. Now, you just had my friend John Ciampaglia on from Sprott. Sprott Physical Uranium Trust is a highly liquid vehicle for exposure to the commodity itself. And that is, something around 80% owned by institutions. So if you are an investor that has a high net worth and you want a liquid vehicle that's exposed only to the commodity and you don't want to take on any individual miner risk, then that's a great way to do it. Under normal market conditions, when you have the Sprott Physical Uranium Trust trading close to its net asset value and dropping back down, you can trade in and out of that vehicle in terms of where it is relative to its net asset value. So if it's at extreme discount to NAV, you can buy it. And when it goes back up to a slight premium, you can sell it if you want to do it like that. My personal preference, of course, I think a basket of miners will outperform simply exposure to the commodity. But I think, especially for higher net worth investors, having exposure to the commodity is a safe and a relatively safe and liquid way to expose yourself to this investment case.
Now, Justin, I know you follow ETF flows in the uranium space pretty closely, so we wanted to pick your brain on that. Just wondering, what activity are you seeing there lately? And say, how does it compare to March when the Russia-Ukraine conflict really broke out.
And I piggyback on that a little bit. You know, just you're following the flows, and also you probably know the composition of the ETFs very well as well. Which I would say, you know, some of these, you know, that may offer opportunities for you as well, where money flows to, you know, creating imbalances for within value within the space as well.
Sure. Yeah. The ETF flows is something that we watch on a daily basis, and it's been more quiet during the summertime. It's definitely been quiet over the past month or so. But interestingly enough, while the market capitalization of this sector is relatively flat year to date, it's maybe down a couple billion. It's somewhere around 30 billion right now for the total publicly traded market cap of the uranium sector. The ETF flows, we've seen net inflows year to date that have been relatively significant. We've seen URA outstanding shares increase by 21.5 million shares this year. URNM increased by 3.7 million shares. So that's about 750 million in mandated buying that has come from the ETFs this year during what has been a very volatile year where you know, the ETFs themselves are up maybe single digits here. They're close to flat year to date, actually. I don't have a chart right in front of me. But the inflows are happening. And to us, this is a big sign. This is a sign that there's accumulation happening. And we believe that that accumulation is coming from quote unquote smart money. When you talk to people like Mr. Ciampaglia, if you talk to, let's say, the Art Hydes and the Adam Robbins from Segra Capital, for example, Marcelo Lopez from L2, Mike Alkin from Sachem Cove, you know, the guys that manage these big funds that are entirely or mostly focused on, you know, uranium investment. These guys are very aggressive and they're very excited about what's coming for the sector. And they've been positioning relatively aggressively this year, especially during these risk-off moments where there's been a lot of fear, a lot of doubt around the markets, generally speaking, around economies, et cetera. Those that know the sector best are getting aggressively longer during this summer doldrums period.
Gotcha. Now, are ETF flows, do you think, are they really a driver of stock prices, or does it depend on the cycle where the flows are going to the stocks or to the ETFs? I don't know if you had an opinion on that.
They definitely can be. I mean, we tend to call this something called the flywheel effect. So it's not the only driver, but when money is really moving, let's say, enthusiastically in or out of a sector, the ETFs tend to exaggerate that move. And so, and because we are still in a bull market for uranium, in my opinion, and that's started, in my opinion, also in December of 2020 is really when this sector kind of took off. Since then, even during the pullbacks, we've seen net inflows into the ETFs. So during a bull market, the ETFs are really a driver of the stocks. They really are. In a bear market, they obviously work against you in the same manner. ETF outflows can really have a flywheel in the opposite direction and really hurt the sector. But even during these gut-wrenching pullbacks, you know, we've had a big pullback from the highs in April to just last month. We didn't really see ETF outflows during that period of time. So yes, they can be, but there's plenty of money moving in and out of the individual stocks as well.
Gotcha. Now, I just wanted to ask you one Russia question here. Based on what you're seeing, in your opinion, do you think that the conflict is priced into uranium after the recent sell-off, or do you see more downside of, say, tomorrow they say they've come to a resolution and they're all going to go back to where they came and it's all fine?
Do I think a resolution of the conflict is priced in?
Yeah.
I would say no. I would expect that if the conflict ended tomorrow, that the sector probably would pull back significantly. With that said, I don't think that that's going to happen. And I don't think that if that happened, all of a sudden the market that is clearly bifurcating right now is just going to go back to how it was. And interestingly, that's part of what is leading to a lag in the movement of U3O8 currently. So we're seeing big moves across the entire fuel cycle right now. And that primarily has to do with the fact that the reactor demand in the West, let's say, is significantly greater than Western supply of conversion and enrichment. And so the market is trying to figure out two things: how much conversion is going to be available in the short and midterm from the West for the West, and what tails assays are the enrichers going to end up at in order to provide that synthetic capacity that the West is going to need to make up for the lack of Russian enrichment. And I think that this is such a big change for the fuel cycle, especially for the Western utilities, that a lot of them, I believe, are taking their time in not only securing conversion and enrichment contracts, but the follow-on to that is securing the uranium that will be necessary to feed through the fuel cycle, because they are waiting to see if this is actually for real, if this is actually happening. And I think that each passing day, each passing week, each passing month, it goes much further to securing in their minds that this is the new reality, that we have a bifurcated market now, that Russian supply, and even without actual official sanctions coming from the West or from Russia itself in terms of uranium deliveries, and I don't think Russia is going to cut off their uranium deliveries voluntarily. They still want to be perceived as being a reliable source of material for the rest of the world. We have a situation where they need to understand that this is going to be the case going forward, and that's what is being worked out right now. And so all of the demand and the big price jumps we've seen in both enrichment and conversion on the back end, that is leading towards a large move in U3O8 going forward.
Awesome. All right, well, Justin, this has been super interesting. I think we definitely should get you on again and talk more in depth, because you're a wealth of knowledge. But so everyone out there, if you don't know Uranium Insider, you don't know Justin, I would check him out. He's on Twitter, and then he has the Uranium Insider newsletter. And we'd love to just thank him for being on.
And a quick, great interaction here on YouTube from Jeff. Larry said, newsletter is fantastic. Jeff's like, Jeff, Justin is one of the hardest working uranium analysts out there, along with John Quiggs. That's a testament.
There you go. Yeah. Your fans are speaking.
Thanks so much for that.
All right. Well, thank you, Justin.
Thanks for having me, guys. I appreciate it.
Appreciate it. Look forward to talking again.
All right, everyone. Uranium Con, we're going. We still got some more experts. Next up is going to be Chapman Scarborough, another guy you might know from Twitter, and he runs the Proven Reserves uranium newsletter. So another guy deep in the stocks, deep in the uranium industry. We'll be right back with him in a few minutes.
Welcome back, Grizzle Uranium Con. The train keeps going. It's a big news day too, guys. Thank you so much. It's a phenomenal. We got a great crew out on YouTube, guys. Thank you so much for participating. Great questions. Please hit the thumbs up if you're enjoying what we're bringing in. If you don't mind subscribing, we would be thrilled if you did. If you're on Twitter, please give it the retweet. That'd be phenomenal. And for more of anything, like our bigger picture, the stuff that we do, grizzle.com is where you will find that as well. Wonderful. Hey, we got Uranium Corgi. We got some celebrities in the house on YouTube. If you don't know, you know. This is very exciting. Reports of the German life extension of mines. Apparently Paul G saying is maybe not correct. Anyways, the future is coming the way it's coming, and we need high energy return on energy invested, as Doomberg says.
Tom,
energy is life.
I'm humbled that we have chickens on here. We have corgis. Like this is amazing. I thought we'd just have humans, but we got all sorts of animals. So I'm pretty pumped up about this.
Farmville in the house here.
Yeah. Uranium Farmville.
Yeah.
All right, everyone. We're getting sidetracked, but we have another great guest. He writes another uranium newsletter. He's on Twitter hosting spaces all the time. So if you ever want to follow him, it's called the Proven Reserves publication. His name's Chapman Scarborough. He's coming up right now. All right, Chapman, welcome to Uranium Con. Great to have you.
Great to be here.
Yeah. Phenomenal. Chapman, thank you. And, we followed each other for a while, and I was always, maybe your Substack. So you have a focused Substack, and I just want to confirm it's provenreserves.substack.com. Is that correct?
Yes. I started that Substack about 3 months ago. I was quite happy with the name. I thought it was something different. And it's been going pretty well ever since. I'm pleasantly surprised by the reaction. Some people, a few, seem to be liking what I have to say. So,
Great.
Go ahead.
And I was just going to ask, for people who don't know your newsletter and they're wondering, like, what is this all about? What am I going to get? Can you just tell them a little bit of the type of stuff you write and the type of content?
And is it free or paid, or what is it?
I do have some paid. Back up. I do some free stuff as well. For instance, if you sign up, I have a free Excel file that just has sort of a rough baseline valuation for all uranium companies across the cycle based on their resources that they have in the ground. And then I have a paid service beyond that where I go a bit more in depth. And that what I do on Proven Reserves is essentially deeply fundamental deep dives into all various parts of the fuel cycle, mines especially, but also the services side of things like the enrichment, conversion, market analysis worldwide. I've kind of come up with my own numbers for what actual demand are and what has to be done in terms of the enrichment side of things because of the bifurcated market that we are still sort of figuring out, or people are figuring out really. But ultimately it is a source for really just fundamental information. I'm a CPA by training. So, I try to bring information about the financials as well as what I learn about the mines themselves, like the mining viability, the jurisdictional risk, and what is also as well the, for instance, say the cash flow projections. I have my own various valuations metrics because I try to do a lot of different ones because you never know how the market is going to ultimately value an investment once it starts getting to the point of being cash flow positive. So it's a lot of information, but ultimately what I try to do is present it in a way that everyone can understand. my target is really retail investors, but I think even high net worth investors will find what I am, talking about and the information that I've dug up. Sometimes people have called me the due diligence detective.
Nice. Love it.
So,
well, it sounds like, with your background, CPA background and your focus on diligence, like it's a nice compliment to any uranium investor to have somebody do the tough stuff, the DD.
Triple D,
yeah,
due
absolutely.
diligence investor,
Detective.
due diligence.
Yeah, it's
so
it's just.
Go ahead, Chapman. Finish.
Oh no, please, no. You were about to ask a question. I'm sorry.
So I got to ask you some questions about uranium because you're living it all the time. So on the outlook for uranium, just start high level. Do you think we're at the beginning of a typical bull cycle, like we saw in 2007, or is this time different from a demand and potential price perspective? How are you thinking?
So the one thing that I've been thinking about lately in terms of just broader markets in general, but especially the uranium market now, is everything is a first time, and everything has never happened until it happens the first time. So comparing this market to maybe the last bull run is a bit more difficult because it's a different circumstance. We have actually a real potential growth in nuclear power now, which is going to feed demand for just, you ultimately, like Cameco said at the end of the conference call, you have to have more U3O8 at the end of the day, as well as the bifurcation of the market, which has impacts on the total demand requirements for uranium that isn't quite well understood yet by everyone. I have my own theory and case on it, but effectively, we are starting a new bull cycle here fairly soon that is going to be much different than previous bull runs. Actually, I have several different ways in which you would classify a cycle. Right now, we are in what I call bull thesis Mark II, and mostly that is based upon the idea of how does this bifurcated market actually affect where you may want to start investing. So for instance, under the prior assumptions before bifurcation, you wouldn't be wanting to look at enrichment, let's say. But because of the bifurcated market and the fact that enrichment in the OECD countries is only about 40% of global capacity, but we have 70% of the generation, something's going to have to give there. And governments are going to have to, and investors are going to have to start making those investments. And you're getting in on the ground floor right now in a lot of those things. So it's going to be a different market, and yeah, it's pretty much where it is. So.
Chapman, do you have a view on large cap versus small cap? Yeah, look, so obviously, like I think I caught one of your spaces when it was Cameco that reported. Like you guys jump on spaces after the big companies report. Just wondering your thoughts, if you have a view on whether you play the big horse or some of these smaller developers.
I think the most important thing is maybe not necessarily big cap or small cap, but ultimately cash flow in the next 3 years, because companies that have cash flow are going to be able to either finance their own expansions, like for instance, more well fields if they're an in situ producer, or in the case of Cameco, they're going to have potentially a lot more cash for them to do the traditional Cameco acquisition, which is a cash offer. So in terms of their beyond that,
surely that's not a huge so maybe I'll just step back there, right? So in terms of cash generation, because a lot of these companies are very small and still developer, that's not a massive universe that's cash flow generating right now. I could be completely wrong, but maybe your take on that.
It's not. No, I mean we're still. We have quite a few producers that are very close to generating cash flow, probably within the next 2 to 3 years here, and. So it's not an important thing now, but that's actually why it makes the analysis of who's going to be generating that cash flow so important here fairly soon. Because if we see that uranium price going up, for instance, to $75, $80, even $90, those producers that are going to be able to produce within the next 2 to 3 years are going to be the ones that are going to be able to potentially lock in that higher rate on a long-term contracting basis versus someone that's going to be in production maybe 4 or 5 years from now, where you may see potential for a more leveling out of demand and perhaps a slightly lower, more stabilized price. Let's say it's $75 a pound, something along those lines. And it's just it frames a different way in how you can evaluate an investor. So, for instance, an investment opportunity. So, for instance, if you have a smaller cap that really depends on the kind of the return that you can get, the difference between say $70 and $85 per pound, them producing within the next 1 to 2 to 3 years is a lot different than them producing in the next 4, 5, or 6 years. So very critical there, I think.
Yeah, so,
and also,
you're basically saying the farther away they are from production, you have to have a stronger view on the commodity itself.
Yeah. Well, you have to have a stronger view on the commodity, and you have to have a stronger view on that investment opportunity itself. Like, so for instance, if it's going to be a very large mine, something along the lines of an NXC, for instance, that's different. You wouldn't say, NXC is probably going to be in production around 2027, 2028. You evaluate that one differently than say like a URG, for instance, that is looking to be in production here within fairly short order. So.
Got it. Now, so it sounds like my takeaway here is that if you're approaching stocks, you think you prefer the ones that have cash flow visibility as you're looking at uranium production.
Oh, yeah, absolutely. Just because cash flow protects shareholders from dilution. I want to have a company that's not only going to be able to potentially pay dividends, but also be able to finance their own operations and expansion of those operations. I mean, that's, I think, really very important.
Scott, I think we have the Warren Buffett of uranium stocks here.
I think we found it. We're anointing you.
This is the Warren Buffett of uranium. Listen, guys.
Radioactive Warren Buffett over here.
That's incredible, man. This is like, you know what this is? We got to put you in front of some value guys, man. This is you're talking Buffett Bible talk.
Yeah, I mean, this has been a great layout for people because there's probably a lot of people to hear about uranium now. It's in the news more, but they're like, well, where do I even start? Yeah. And so I think you gave them a great roadmap. I want to end off with one thing. I'm just curious because you look at uranium quite a bit. Have you been looking at any of the latest technologies? Like, I know there was big news this week that TerraPower, which was backed by Bill Gates, got a big investment. Like, have you looked at the technologies? Do you think any of them are anywhere close to prime time, or is it really this whole story we're talking about? They're not going to really play a role because it is 5 to 10 years away.
Well, they will play a role in the sentiment of the market. So, for instance, and even if you have something that's 5 to 10 years away, a lot of people don't realize that you have to start planning your uranium, your initial fuel loads, like ASAP, because you need to have those orders in for the enricher, and particularly for the HALEU. If you're going to have these SMRs that are going to be using HALEU, they need to start planning for that now. Now, I do pay attention to, I am actually a big believer in SMRs. I think that they, in the OECD, they have the ability potentially to really revolutionize the way that we think of nuclear power, how we deploy nuclear power. I'm actually going to be speaking at a conference in Canada for the Canadian Nuclear Society, specifically about fourth gen SMRs. So that's a really exciting opportunity. Yeah, it was something I was just
invited. Where's that, Chapman? Are you coming to Toronto? Where are you going?
Yes, I will be in Toronto.
Well, let's have a beer.
Yep. Yeah, let's do it. Okay. Wow. You're in Toronto. I did not know that.
Guys, we're gonna have a live one-on-one. We'll do a live version of Uranium Con at a pub in Toronto.
Yeah, maybe we'll do a Spaces. Who knows? A lot of options here.
Yeah, you know what? It's kind of a headquarters for that kind of thing. We got John from Sprott, and listen, Chapman, this was fantastic. We had a great back-to-back here. Uranium Insider, Chapman. These are the guys connected to the retail investors, both on Twitter, through YouTube. Can't thank you enough,
So
guys.
how do we check them out again? Is it provenreserves.substack.com?
Exactly.
Gotcha. Chapman, thanks for joining us.
Yep. Thank you again.
All right, take it easy.
Thank you.
All right, everyone. Uranium Con. It's been so much fun, but we're right near the end. But don't go anywhere because we have another fund manager. He manages the uranium fund for Horizons. He's going to tell us a lot more about that and his thoughts on the commodity and the stocks. So don't go anywhere. We'll be right back in a minute.
All right, man. This has been an afternoon of insights, intel, green chickens, you name it, man.
I promised you at the beginning, you're going to learn something about uranium. I know I've learned a ton. Hopefully you've learned a ton. There's a lot more to know, but we still got one more guest who's, a big player in the uranium market.
Oh, but before that, Scott, I have to ask. Before the intro, guys, if you YouTube's been phenomenal. Guys, thank you so much for all the great questions, conversation on YouTube. Please, if you're enjoying it, please give it the thumbs up. And if you are not subscribed to Grizzle, consider subscribing on the YouTube. Also get our weekly newsletter where we drop all our insights. And we have arguably one of the best strategists on in global Wall Street, in Chris Wood. We publish that for free. You can find all of that on grizzle.com. Give us a follow. And then also, if you're on Twitter, please give it the retweet. Would appreciate that. Thank you very much. It's been a phenomenal afternoon.
Yeah, thanks, everyone. All right, so without further ado, we're going to be talking to Nick Piquard. He's a PM of the Horizons Uranium ETF, and so we're going to bring him up in just a minute. right, Nick, welcome to Uranium Con. Great to have you.
Great to be here. Thank you.
Nick, thank you.
Okay, so Nick, you've had a front row seat at Horizon explosive growth in ETFs assets over the last decade. Can you give viewers a quick recap of who Horizon is? And then we'd love your perspective on the rising popularity of sector thematic ETFs.
Yeah, so Horizons is one of the first ETF providers here in Canada. We've been around for a very long time, and one of our key growth, in the past several years has been the thematic space. Giving investors the opportunity to invest in sectors that they wouldn't otherwise be able to invest in. We had a lot of success with those. We had the marijuana ETF. We have a psychedelic ETF. And a couple years ago, we really noticed the fundamentals changing for the uranium space, and Canadians not really having an ETF to purchase to get exposure to that sector. And so that's really what drove the decision to start HURA.
Now, we ourselves, we have an ETF, so we understand eminently how they work. But I think investors, based on the questions we've gotten, they don't fully understand the benefits of an ETF versus buying individual stocks, a basket of stocks. Could you just tell people quickly, what are the benefits of ETFs? How do they work a little differently from if you just bought 10 stocks?
Or bought a fund.
Yeah, a mutual fund.
Yeah, mutual fund. That's a great example, because the industry is transitioning to this ETF model, but people still don't understand how lead market makers work. The fact that they just
the liquidity. We get a lot of questions on that.
There's a lot of questions on just how it works, and you guys are a huge player in this.
Yeah, no, absolutely, and the biggest advantage for ETFs over mutual funds is really the costs. The costs and the fees associated with ETFs are significantly lower on average than what you would pay for a mutual fund. So that's one of the big advantages. In terms of trading and liquidity, this is really all based on the ability for market makers to make a market. And they make a market on these ETFs just like they would on any other stock. And so you can buy an ETF just like you would buy any other stock. And that makes it very easy for you to gain exposure to 30, 40 names in one click. And that's the big advantage of an ETF versus buying each individual name. If you look at HURA, for example, we have names listed in London. We have names listed in Australia. These are very difficult sometimes for investors to purchase because, you're asleep when Australia is open and whatnot. So, buying these ETFs really gives you, in HURA's case, global exposure to companies in the uranium sector. But that's the case for, all sorts of ETFs. It's really makes it a lot easier for investors to get exposure to certain themes or certain sectors or certain markets.
Yeah, a point I would make too is because there's a lead market maker behind an ETF. Just because you look at the volume on, say, Yahoo or Google and it looks low, it doesn't. There's still a lot of liquidity there because there's a market maker who's always there buying and selling shares, and that's something investors are kind of used to seeing a stock and they see low volume, risky. Can I get in and out? ETFs don't work the same way, so that's another point I'd make.
Yeah, and you bring a very good point. Yeah, if you look at the volume on some of these ETFs, they might seem low, but you can still get significant sized on the bid or the offer because there's underlying liquidity in the underlying portfolios of stocks that comprise the ETF, and so sometimes it's a little bit misleading to look at the volume itself and say, oh well, this ETF doesn't have any volume, but despite that, if you are willing to pay the offer price or whatnot, you're going to get a lot more liquidity than you would otherwise.
Yeah, exactly. So staying on Horizons in your uranium ETF, could you help people understand? So what do they get through this vehicle? Kind of how did you structure it?
Yeah, so what was important for us in structuring this uranium ETF is we really wanted to give investors a global exposure to uranium miners and really a pure play kind of a uranium product. So when we chose the index to track, it's a passive ETF that tracks an index, but that index we wanted to make sure had the right weightings and whatnot. And so, if you look at the uranium space today, the two biggest companies that are pure play are going to be Cameco and Kazatomprom, but they overwhelm all the junior producers and all the junior companies. And so we cap those at 20%. We don't want any one stock to have a 20% weighting. So you have 20% in those two bigger names. And then we also wanted to give exposure to the physical uranium market. And so we have a yellow cake that's 20% of the fund. That gives us our physical exposure via the yellow cake. And finally, we wanted junior exposures. I mean, if we're going to be in the uranium bull market, those are the names that really have multi-bagger potential. And so that is 40% of the portfolio. And we think that kind of barbell portfolio of 40% large cap, 40% small cap, and 20% physical exposure really gives you a nice broad exposure to the sector.
So it's almost like you kind of set it up as a one-stop shop, like you get everything in one place, and does that have you guys done some risk analysis on that, or is that kind of like the way that it is a good fit for the correlation between these types of assets?
Yeah, well, absolutely. And if you look at the performance of the index, it goes back historically several years. And you'll see that, it correlates fairly well with the ups and downs of the uranium sector. Unfortunately, until a couple of years ago, it was mostly down. But, ever since we launched the ETF at $10, it's already more than doubled. I mean, we've had a bit of a pullback in the past, in the summer. But it's, like your previous viewers have really talked to, or your previous presenters have really talked about, I think today is an amazing opportunity for the sector. So,
yeah. So on that point, I wanted to ask you kind of your high level thoughts, what you look for. So what are you watching for that will tell you to say demand growth is on a new trajectory? Now, this isn't just the typical ordering cycle in uranium. We're actually going to get potentially reactors coming back. Like, what are some of the things you're watching?
I mean, one of the big things I think that I'm watching personally is, the financing for the nuclear industry. One of the big things happening in Europe, of course, is labeling nuclear energy as green ESG energy, which would allow for much cheaper financing of these nuclear power plants. If you look at the cost of nuclear power, a lot of it is into the financing of building the plant in the first place. We always hear that, the Chinese are able to build all these plants so much more cheaply than the West. A lot of it is because they have all these very, very low and cheap financing from the Chinese government. So if we can get the same kind of...
That's a great point, Nick, right? Like, Nick, like when people, I think a lot of people point to this, look at the track China is moving on. Well, that doesn't come without a strategic vision from the government and a push along the way, right? Reducing the cost of capital is an important component of getting more nuclear online.
Exactly, and I think we're starting to see that. I mean, so we're starting to see that in Europe with the ESG rules over there, and we're seeing that in the U.S. as well with Biden. First of all, with obviously the uranium reserve under Trump, but now with this new climate act that just went through, Congress, we have the potential to bring more subsidies for nuclear power, more abilities to reduce that cost of electricity generation and that cost of capital.
Yeah. Hey, well, Nick, I mean, this has been a great conversation. I know we can go on. We'd love to have you back another time to talk more about uranium. But
Nick, can you remind us what is the ETF and the ticker and where it's traded?
Great.
Yeah.
Yeah, so it's a TSX, or it's listed in Canada. It's on the TSX and the other Canadian exchanges. The ticker is HURA, and And yeah, it's the only uranium ETF listed in Canada. So we're happy to have that.
There you go.
Very cool. So any Canadian investor watching, this is the one. This is the one for you.
Nick, appreciate it. Thank you so much. Guys, thank you very much. This has been an incredible day. We've had a phenomenal run.
I'm starting to tear up. I can't believe this is over. It's been so much fun.
Hey, so one thing, I will put up our wonderful partners. If we can put up that slide. There we go. Thank you so much. It would not be possible without our wonderful partners who made this happen. First and foremost, our lead partner, Red Cloud Financial Services. You can check them out at redcloudfs.com. Lead partner, and of course, you heard him from the beginning, Doomberg, the wonderful green chicken. He's running the most interesting, insightful Substack there is in finance. It's number 2 on the board, on the top of the pops. Not for long. It'll be number 1, and it'll stay there for a long time. You can find that at doomberg.substack.com. And then finally, none other than the king of commodities themselves, physical, of course, Sprott Asset Management. If you know commodities, you know Sprott. Enough said. Scott.
Also, I got to say, if you guys haven't enjoyed what we've been doing on Grizzle, we do conferences like this on all the important emerging growth sectors. That's what Grizzle's known for. If you want to subscribe to any of our stuff, we put out a ton of research. We do live shows, answer your questions about different sectors. You just go grizzle.com/subscribe or Grizzle Media on YouTube, where hopefully you're watching right now. Yep. You can just follow us, and anything we put out, you'll get it.
Yeah, guys. First of all, I want to thank everyone for tuning in. YouTube's been phenomenal. Twitter, thank you, guys. If you haven't, obviously, do subscribe. We're bringing the heat always, and also if you miss parts of this episode, you're driving, you're moving, we will have a podcast available probably in the next 4 or 5 days. So that'll be available. You can find that on iTunes, Spotify. We're on the major platforms. Just look up Grizzle Pod. The Grizzle Pod, and you can also get all our past conferences as well, which Commodity Con was there. So I always find those are good for the drive. Guys, I want to thank everyone. It's been a phenomenal run here. We'll do it again. Stay tuned. We got some big conferences on the way. If you are commodity, what did you call it? Commodity curious?
No. Yeah, well, today was yellow cake curious, but if you're commodity curious, we're just getting spun up on these types of conferences. We learned a lot. We hope you learned a lot.
Scott, you got to tell them about your background, because I think if you guys don't know us, both of us, Wall Street, Bay Street, we have a commodity background. Scott, tell everybody a bit about yourself.
Yeah, so I was a sell-side analyst publishing research on commodities on Wall Street. And then I ended up making the move to the buy side, putting money to work in commodities as well. That's where I met this gentleman, and tell him your background as well.
Yeah, so that's where I met Scott, and we're like, hey, listen, in commodity land, when you meet a good egg and you're thinking the same, you tag team and you keep going. And when Scott moved over to TD Asset Management, that's where I met him. I was running resources, so I was head of resource investing at TD. So that included gold, precious metals, all of the resource, all the resources, base metals, oil, energy, the whole gambit.
Everything we've talked about today.
Everything. So yeah, stay tuned. We'll bring more. We got a phenomenal list of great friends, guests, and I think we've got many more important stories to tell in the commodity landscape. We're just scratching the surface. We believe we're in the early innings of what we believe is a decade-long plus commodity bull market, because if you haven't, consider going to etf.grizzle.com. That's where you'll find our quarterly letter.
Yeah, we just published that with our thoughts on where we think the economy's going. Some of the big multi-decade themes that we're playing might be helpful to give you a little view on how we think about the world.
Yeah, you check that out. Our quarterly letter, it will give you a lot of insight. And also, finally, last plug is for Chris Wood. For those who love great macro research, can't emphasize enough, we are fortunate to have one of the greatest greatest
Hands down.
macro strategist really there is. Chris Wood, a luminary, along with a select group of great macro strategists. He's not afraid to put out a call, and that is the key thing. And the important part is you get it for free. That's
very important. This is a guy putting out the level of research that when I used to work on Wall Street, I had to pay a lot of money for. This is free. You just go to Grizzle every week. He's publishing on there. Definitely wouldn't miss that.
Yeah, so go to grizzle.com/subscribe and we'll get you on the list for everything. Big thank you to everyone for tuning in.
I think Uranium Con, that's all she wrote. We'll see you guys next time.